Philippine property investment in 2022 comes with both potential and risk. The long-term prospects of the country's real estate market remain strong, with positive economic signs already being seen. For example, OFW remittances increased during most of last year. Many experts believe a full recovery is likely to happen once the COVID-19 pandemic passes. Of course, when exactly that happens remains uncertain. The emergence of new variants have derailed plans to reopen the country to tourists and could dampen prospects in the first quarter of 2022. Prior to the most recent outbreak of coronavirus, economists at the Japan Center for Economic Research and Nikkei had set the Philippines' 2022 GDP growth forecast at 7.1%. Another thing to keep an eye on this year is the presidential election set for April. This will have an impact on both the economy and real estate market moving forward. With that in mind, here are 4 other things you're going to want to know about Philippine property investment in 2022. Philippine property investment in 2022 is directly connected to a greater real estate market recovery, which may or may not begin in earnest during the next 12 months. Those searching for positive news will look to predictions from the Philippine Central Bank. The BSP anticipates that activity in the real estate market will recover in line with a rebound in overall economic growth in 2022. Real estate demand slipped due to the uncertainties brought about by the global health crisis, as capital values for office and residential units in the country's major commercial and business districts slumped in 2020. Meanwhile, property prices in Cebu began to increase last year, and that trend is expected to continue in 2022. Don't get too excited though. It may take a little longer for the market to recover due to 2 factors. Firstly, the country's reliance on overseas investment means travel restrictions will need to be removed in order for activity to pick up in full. Secondly, a lack of new launches, especially in Metro Manila, could limit interest in the short term. Companies resuming full in-office operations would be a boost to Philippine property investment in 2022. The business process outsourcing sector would be a key driver here should there be an uptick in demand. More office space uptake creates more hiring, which has historically boosted interest for residential real estate nearby. The biggest change when it comes to Philippine property investment is happening in the suburbs. People continue to swap central business district condos for housing outside the city. This is especially true in Metro Manila, where township developments to the north and south of the National Capital Region have lured people away from the metropolitan area. Provinces around NCR are benefiting from the completion of major infrastructure projects, including both rail and road links. If the new normal and work-from-home policies become the norm, it could dampen condo investment prospects in certain locations. The Davao economy and real estate market have outperformed the rest of the country over the past 2 years. Buoyed by infrastructure investment along with an influx of national and international companies, the region has become a destination. Here's what Joey Roy Bondoc, Senior Research Manager at Colliers, had to say on the situation. In our view, the Davao economy is ripe for further expansion and development. With a thriving real estate market, an abundant pool of quality labor, and a competitive business environment, Davao is set to attract future property investors to operate in the area. More talent and a continued increase in jobs would be a boon to condo investment in Davao. Many leading Philippine home builders have begun launching projects in the region, which has elevated the local real estate market even further. All things considered, the Philippines remains one of the most interesting real estate investment destinations in Southeast Asia. While there is still uncertainty in the short term, the long-term outlook of the country, both in terms of economic and real estate growth potential, is quite strong. And while you will always have those naysayers making wild claims about how the Philippines is overpriced or it's not a good investment or whatever the case may be, in reality, the market fundamentals are favorable for investors, especially in terms of the need for housing and the demand property will have moving forward. The situation isn't perfect, but no real estate investment situation is. However, when you factor in everything, the Philippines does make a lot of sense. Just be sure to monitor the situation as it relates to COVID-19 because that will have the biggest impact moving forward. If you have any questions or comments about Philippine property investment this year, be sure to leave them in the comments section below. Until next time, I'm Cheyenne Hollis, and this is Interesting Asia.